Hi, Nick Colas from DataTrek here, and today's topic is whether Bitcoin trades more like stocks or more like gold. And there are people who believe both of those things. Some people believe that Bitcoin is just a turbocharged version of the stock market. Other people think gold and Bitcoin are very similar because they have limited supply and demand drives prices. Both fair arguments, but let's dig through and see which one's actually statistically true. Now, to give you some background, I was the first analyst on Wall Street to cover Bitcoin back in 2012 and 2013, and I did that because I thought it was an interesting asset and very different from stocks, very different from bonds or gold or anything else. And I thought that that would be an interesting asset to analyze over time just to get a sense of what drives demand, what drives prices for a new asset, which back then it absolutely was. Now it's a much more established asset class on its own and created a lot of other interest in other digital assets. Now, to analyze the question, we're going to be using correlation analysis, which simply measures how closely two variables move with each other or against each other. A correlation of 1 indicates that they move perfectly together. A correlation of 0 to 1 indicates they have some positive relationship. One might go up a little bit more, down a little bit more, stray some days, but in general they track close together. A correlation of 0 indicates no statistical linear relationship at all. These two assets are entirely different. And then correlations of 0 to negative 1 tell you there's some negative relationship, and a negative 1 correlation indicates there's a perfect negative relationship. Now, here is a chart that shows the 30-day rolling return correlations of Bitcoin versus the S&P. And as you can see, it's all over the map. There have been times over the last year where Bitcoin and stocks trade absolutely differently. No relationship, a zero correlation, as they did in, say, April and March of last year. And there are times when the correlation is pretty high, as it was in August, of a 0.7 correlation. So even then, there is some room, some wiggle room where Bitcoin's not trading just like stocks. Now, interestingly, the correlations fell quite dramatically after the U.S. election, as you can see on the right-hand side of the chart, where they fell from 0.6 to 0.2. And that's because Bitcoin ripped after the election, because people perceive that President Trump and the new administration will be a lot more crypto-friendly. But even then, correlations have now come back to roughly 0.5, 0.45. So there is some relationship still between Bitcoin and stocks, but nowhere near 100%, nowhere near even, on a statistical basis, 50%. Now, looking at Bitcoin versus gold, we see some of the same thing. Here, correlations between the two assets are actually lower. They average just 0.14 over the last year versus in the 0.3s for stocks. And you see several periods where the correlations are 0 or negative, and the most negative one was actually right after the election when Bitcoin rallied, and it looked actually like a negative version of gold. It moved up and down on entirely different days than gold. So the correlation here is quite a bit lower, running around 0.14 and between 0 and 0.4. So not a very high correlation at all. This chart says Bitcoin and gold are very different assets. So what do we do with all this information? The first is just understand Bitcoin is not a hyper version of stocks, nor is it, quote, digital gold. It has elements of gold fundamentals in it because there's limited supply and demand matters a lot, but it doesn't trade like gold. It's a very different asset. It trades on its own fundamentals, which are based on incremental demand from individuals, institutions, companies, and governments. So as those groups grow more interested in Bitcoin and start buying it more, the price will tend to go up. If we have a stall out and people say, well, I'm not sure I want to own this asset, then the price usually goes down. Bitcoin is, on the plus side, by the numbers, a very effective diversifier for a financial asset portfolio, because I showed you there's not a lot of correlation, and that's what you're looking for when you're looking to add an asset to a portfolio. Does it have a low correlation to your other assets? And at least in terms of stocks and gold, Bitcoin actually is pretty good diversifier. So that's the plus side. However, and this is super important, and I want to end on this point, you need to believe in the Bitcoin story to make it an investment. And that's not for everybody. I know a lot of really smart people who still don't think this is a viable asset. I personally do, but I understand the caution. And for people who don't believe it, it's entirely okay not to own it. All I've tried to show you today is that it doesn't trade like this common idea of being a hypercharged version of stocks. It doesn't trade like digital gold. It's absolutely its own animal. So with that, thank you very much for taking the time to listen in or watch the video. If you enjoyed it, please hit like and subscribe. And if you're interested in more information about DataTrek research, just go to our website, datatrekresearch.com, to sign up for a 2-week free trial. Thanks a lot. Have a great day.